Good evening, everyone. Thank you for being here and welcome to an evening with Paul Huggins to celebrate the launch of his new book, Intelligent Leverage. My name is Chris Kohler. I'm the finance editor with the Channel 9 network, which is a job that has allowed me to cross paths with some of the best financial minds in the country. I absolutely put Paul Huggins in that category. But we'll get to more of that in a moment, Paul. Some housekeeping first. We are, as you can see, going to have a brief panel discussion, followed by some questions from you. So if anything comes up during the course of the chat, please keep it in mind. We're going to have some roving microphones coming around later. Copies of the book will be on sale tonight. Thank you to those facilitating in the corner there. And Paul will be available to sign copies at just after 7, so also keep that in mind. Good opportunity, of course, to buy maybe a pressie for someone who wasn't able to come here tonight. Thank you to the RACV Club and to Steve Dabkowski as well for his efforts in organising tonight. Now, the words below the title read, "The simple system that successful investors use to create wealth." And we're going to hear from the man behind the book this evening because in addition to laying out strategies, the author also has a keen eye for the changing investing landscape, both here in Australia and, of course, abroad too. But first, to properly introduce Paul, for those who aren't already familiar, born and raised in Melbourne, Paul started his first business at 16 and was soon pulling down 5 figures a month at 16. Not a bad starting point, not a bad finishing point, really, for a lot of people. Formal education followed: law, economics, financial advisory, and a master's in international tax at Melbourne University. Property development, funds management, clients in Australia and overseas followed, and a portfolio worth an impressive $21 billion or more. And in his spare time, if you can believe he has any, Paul presides over what is, in the opinions of many, the finest collection of classic cars in the country, for anyone unaware, which is actually the reason he and I first crossed paths. I did a story on his collection for the national news, and it was probably while he was driving me around in one of his classic Jaguar E-types that I kind of thought, maybe this guy's got it all a bit sussed out. Turns out I was right. This book outlines practical, usable insights for all investors. I've certainly enjoyed reading my copy, along with a way of thinking about both investing and leverage, which is not a dirty word, as Paul will give us some insight on a little bit later. We're also lucky tonight because Paul is joined by another of Australia's big brains. Besa Deda is the chief economist at WESTPAC Business Bank. She is also chief economist at St George Bank, Bank of Melbourne, Bank SA and BT. So, Besa, we know you don't have a lot of spare time, so thank you for spending tonight with us. Besa will speak to the big picture, I suppose, the impact of some of the geopolitical problems that we have been seeing. The upcoming election in the US is obviously cause for some focus, I guess, and how Australia is going to come out of this nasty per capita recession that we've been dealing with for some time now. So we'll talk about that. I've been assured, though, that there are plenty of opportunities for savvy, well-read investors, and hopefully you'll come out of this evening with an idea or two as well. But you've heard enough from me. After all, I have not written a book. I'm not the chief economist of my own house, let alone some of the biggest financial institutions in the country. So time to throw it over to the pros. And a reminder, we will have some questions, so keep those in mind if they come up. I want to, Paul, start with you. Microphones are on, which is good. Always a good start.
Okay.
Look, as mentioned, you started young. Your first business was when you were 16. Could I start, I guess, by asking for some reflections? I know in putting together this book, you've been doing some thinking. Is there any moment, any kind of time that helped shape your thinking towards investing in Australia?
I think at a very young age, the idea of work and being very focused. I mean, money was back then, 30 years ago, 40 years ago, 50 years ago, money and still is, a dirty word, the root of all evil. I think but that's the way a lot of families brought up post-war. But I was one that had great ambitions, and there was certainly making money and working for a reward was something at that age that was very, very important to me. I think that what drove me is that I'd seen families that had struggled and families that had done very, very well. I was very fortunate that my father's side were extremely entrepreneurial, and my mother's side were more the academics. And so, I could see the difference between the two. The academics, I mean, one great-grandfather, Chief Justice, Supreme Court judge, not an extremely wealthy man, extremely clever. And then my father's side, that the grandfather had left school at a very young age. And I could see the difference between, education and entrepreneurship, the ones that had things and the ones that hadn't. And I think hard work was something that was ingrained to me at a very young age. And I liked what I saw what money could do within reason. So that's what motivated and drove me. And I think that money the term can be misused. I mean, I've always said it's a tool for getting things done. I don't look at money or as something that having a great hoard of money is something that's going to make you happier or a better person. In fact, money is probably a lot like alcohol. It'll just bring out that person you are, exaggerate that person you are. I think that's very, very true. But that generally overall was what motivated me at a young age to be. I was extremely, and I don't know whether that motivation, and I don't know whether you can coach motivation. I don't think you can coach motivation. Very competitive by nature. And yeah, I think that was the reason why. Hardworking, and I like what money could do to enhance your life.
It's interesting to hear you talk about it in those terms, because you do also say in the book that you'd rather be crying in a Rolls Royce than a Morris Minor, which is a fair point, I think.
Well, it is, and I mean, I don't think it may, but it's not everything in life, but it certainly helps. But yeah, and I think a lot of the left sort of view money and the capitalism. That's probably the biggest problem we've got in this country. Where we moved towards left, and the term we have in our household was go woke, go broke, and I think there's a lot of truth to that, and to keep it in its place. But yeah,
perhaps I could ask you then: do you think that Australia is still a good place to invest? Someone who's been doing it a while, you've seen some different versions of this country. I mean, do you think Australia is a good place to put your money?
I think what you're seeing now in the markets, particularly the stock market, generally speaking, the stock market is now 15% to 18% overvalued. And not in all sectors. I mean, the areas of technology, streaming, I think that area is probably valued correctly and got huge run. I think a lot of other areas are extremely overvalued. Real estate in Victoria is becoming non-viable for development, acquisition, particularly in the inner city, 30, 40 kilometre radius of CBD, and Sydney, and Brisbane for that matter, mainly because of the statutory costs of land tax rates, municipality, and I think that's the biggest problem. The yields now on investment in Victoria have been stripped by 65% in the last 10 years. So if you were earning 7 now, you're earning 2.7, 2.6. So that's the biggest problem. And then when you've got interest rates where they are, which aren't a bad thing at the moment. Interest rates right now are almost exactly where they were 30 years ago. And 34 years ago, they were 18. So 7%, 6%, if it's deductible, is 4%. But I think overall, Victoria, Australia as a whole for investment, very hard to make an investment work unless you're in business because you pull the strings. But buying an investment today is extremely difficult, and I think most of the opportunities now are abroad, believe it or not, in certain pockets of the US. Some of the biggest runs in investment now we're seeing in real estate is coming from certain pockets of Europe, Vietnam, Canada and Portugal, believe it or not, for real estate. And I've got investments in Europe and I've got investments in the United States. To get a planning permit now in the United States on a land subdivision, which some of the people assisted me in some of my overseas developments, took 6 months to do a $200 million subdivision. And here, a land subdivision would take you 2.5 to 3 years, something on that size.
Yes.
So that's the costs.
Absolutely. Besa, Paul's mentioned a few things there in terms of interest rates, historical norms, kind of touched a little bit on sentiment factors. Yeah. Can I ask you, for all of us who are kind of keen to gaze into the crystal ball a little bit with you, what sort of future are we wading into as Australians over the next year, perhaps 2 years? I mean, what's the big picture telling us?
Well, I think over the next period of a couple of months, we're just going to see economic activity continue to toddle along. We've got consumer spending growth, which is slowing. You mentioned per capita terms, Chris, earlier. In per capita terms, consumer spending has been going backwards for 5 straight quarters, because one of the areas of resilience that is helping the economy toddle along rather than fall into a recession is the explosion in net overseas migration. Over the last 12 months, net overseas migrants have breached 500,000 in number, which is an incredible number and much bigger than any policymaker anticipated. And the reason why it's so much bigger than any policymaker anticipated is because once we reopened our international borders, arrivals bounced back very quickly, but departures did not. And net overseas migration is net of arrivals and departures. So that population explosion, extra people coming to Victoria and New South Wales predominantly, means extra spending on brown goods, white goods, green goods. And so you have seen consumer spending be more resilient than otherwise would be the case. We've also seen inflation come down from a peak of nearly 8% in late 2022 to 4.1% more recently. We get an update next week. So we're seeing inflation moderate and come down faster than expected. But the Reserve Bank really wants to be convinced that inflation is going to go in the band. And part of that, I think, is because they look across to the United States. And in the United States, what we're seeing is a stickiness of inflation pressures. So for the 3rd straight month last week, the inflation report printed above market expectations. And so at the start of this year, financial markets were thinking that the US central bank will cut 4 times. They now expect the central bank to cut just 2 times. So we've seen the markets push out the timing of rate cuts in the US, and equally we've seen that occur in Australia. We've seen markets push out from about August at the start of this year out towards December now. Part of the move to December, though, reflects what's happening in the United States and the belief that the RBA won't go before the Fed. They may go before the Fed, and I think there's a risk that you see a bit of a squeeze where economic activity here is slowing faster and inflation is slowing faster than in the US. So that risk is starting to open up. So from 1 July, you've got stage 3 tax cuts. More money now goes to those households that earn less than $150,000 per year. There are also the households that are seeing more stress on their household balance sheets. So we expect some of those dollars to be spent. That'll generate some modest inflation risk. That'll also help consumer spending and economic activity more broadly. And then rate cuts should come into play later this year, which will then also help economic activity revive to some extent, where you see moving into 2025 on a better footing.
Besa, I'll just follow that up because consumer sentiment data comes out from Westpac. It's fantastic. It's very interesting every time it comes out. It's so low at the moment. Recessionary lows. It's worse than COVID, worse than the GFC, those sorts of levels. I guess this is a question almost for both of you. Do you think that Australians are going to be hard to convince that things are going to get better? We've had a pretty rotten few years. Is it hard to turn that ship around in terms of sentiment, making us feel better?
Look, we've seen consumer sentiment be in the doldrums for the last 2 years, since March of 2022, roughly. I'm convinced that you won't really see consumers feel optimistic, that is, cross over the 100 line, until rate cuts materialise. I think it will take rate cuts. Now, when we tick our surveys, we say current economic conditions and the prospects of the economy, we feel quite downbeat about it, and that's the way we tick out the box. But then when you look at consumer spending trends, we're still spending at cafes and restaurants. Hospitality is one of the areas that actually stands out in terms of where we're spending, as is experience-based spending. I actually came to Melbourne for the first concert of Tay-Tay, i.e. Taylor Swift, and that was certainly very concrete evidence.
Were you there too, Paul?
No, I didn't. Bought the CD. No, I didn't buy the CD.
They were spending up.
That's right. So, whilst we complain about the economy and our prospects, we are doing it with a glass of champagne and a cup of coffee in our hand. We are spending less when we're out and about. So when we go to the local restaurant, we're not spending $60 on the steak. We're spending $35 on a chicken parmigiana. So we are shifting down, and that is impacting the turnover of retailers, and that'll feed through to retail stocks as well in the share market. So in my opinion, once rate cuts start to materialise, we might get a more sustained improvement coming through.
Paul, one of the big themes in this book is taking control. With all that in mind, what Besa just said, it's quite gloomy. Do you worry a bit, and it seems to come through in this book, that people are leaving too much of their future up to others, or kind of, as you put it in the book, perhaps asleep at the wheel?
Everybody wants to go to heaven, no one wants to die. And I say that because generally people, Western world, they're generally lazy when it comes to research or having to work or think. And I think that with research, for example, is a great example. In the advisory markets, you've got advisors, institutions, not so much bankers, but certainly the advice that's given to the retail market. And I refer to it as yesterday's race guide, because the information today that's distributed on the 16th of April was signed off by directors around about the second week of January. It's 90 days old. It actually has no bearing on the future. And I think that, how many people have got control today over CBA or Westpac share price? Well, you probably have an influence there. Generally, you don't, and that's why private enterprise and employing people, the reason I don't believe it for one moment, getting back to the previous question, that people believe that the things are getting better. I don't believe that at all. I don't know whether interest rates, it's a reprieve in 2 or 3 interest rates, are going to actually stimulate the economy, because there's not enough business or government incentive for business to employ. Cost of labour now is sky high. I don't want to depart and skew off from the question, but getting back to control is that's why private enterprise, people rely too much on information, and I think have been blinded by institutions to accept and ignore or misunderstand risk. In my business today, nearly 98% of my time, and I do some big projects now, and I have a very selected few of partners, very few now, where I had a lot of, now I have very few, on one hand. And my job is pretty much, all I do is manage risk, think about what can go wrong. And I can control those outcomes to a degree. When you're in the retail market, you have no control. You're just relying on that information, yesterday's race guide or yesterday's weather report, which has no bearing on tomorrow. That's the problem. And people believe in that and hang their hat on that. She'll be right. The backslapping individual Australian's motto, she'll be right, mate. Well, it won't be right. And people need to wake up to the fact.
Is there anything that people can do to grab their own portfolio by the scruff of the neck and have a bit more control? One of the things that you and I have spoken about is, how many people are invested in Telstra can't tell you the Telstra board's, name, who's on there.
Yeah.
Can people do research? Can people properly look through and manage their own risk and have a proper go at this?
Well, they can, but that's like someone, I never forget, years ago, people talk, when I was running professionally, a lot of people would say you'd meet at weddings or 21st, and I'm I want to get myself into shape, Paul. I really want to do that. It's a New Year's resolution, and I want to get myself really fit for this year. But, they're out drinking and smoking until 3 o'clock in the morning. And I say to someone, well, if you had a $500,000 racehorse, you wouldn't have them out drinking and smoking until 3 o'clock in the morning. So why are you doing it? So I don't know how, you've got to want it. Dig deep. How many people have got the time and inclination? But it's your own money. It's money that's been taxed, and it's either sitting in an investment, and you won't spend time on it. I find that fascinating and disturbing.
Yeah.
At the same time, I find that disturbing.
Look, with that in mind, perhaps people could come away from here with some goals because that's another part of the book is goal setting and the importance of, whether it's in investment or, as you say, in your own personal life, fitness, anything. I mean, that comes through loud and clear. What do you think? How important is that?
Well, not having goals is like having, everyone's seen that movie Castaway, that Paul Wilson.
Yeah. Yeah.
I see people like Wilson.
Yep.
And he has no idea where he's going. Another great movie is a great metaphor is Ben-Hur, when Charlton Heston's rowing on that boat, not on his own volition, having no idea or why he's there. It's a great movie, Ben-Hur. So they've got to want to do it. I don't know whether you can coach motivation, but the people need to start taking it very serious on where their money's invested. And I think that when you look at an industry fund and then the underlying managers, here's one thing to take away. If you're in real estate and you've got a real estate and it's rented, you've got a real estate that's going to take a management fee off that of between 5 and 6%. If it's commercial, it varies. But let's say residential, let's keep it simple. 5%. In the investment world, institutions are taking 18 to 22% of your money, of the earnings.
In terms of super.
In terms of just management fees, performance fees, forget the government, forget Canberra for a moment. They're taking 4 times the cost off the yield. Now, people will have no idea about that, but that's what's happening. It's been happening for 80 years. Forget the government for a moment, that's another argument.
So do you have concerns then that people aren't going to be as well funded in retirement as they think that they will?
Well, if you have a look at the financial independent today, the financial independent today is sitting about 1.34% of Western world. It's pretty alarming. And you've had, when you look at the opportunities out there, in fact, it's probably the easiest time in human history now to make money. And to make money in business, in investment. But it's not going to come from throwing into an industry fund and hopes for the hopeless. And that's what I say. I think you really do need to know where your money is and understand. You would understand where your money's going. I think people are quite. If I asked someone now about Telstra to name me, and Telstra's probably the widest held stock in the country, outside of WESTPAC shares. There's not one person in the room that could name me 3 at the board. And I know that because I've been asked that question for 30 years.
Embarrassing quite a few people, I'm sure, along the way.
But that's it.
Yeah.
But you'll know how much you spend, and all due respect, what the ladies spend on clothes and what the men spend on whatever they spend their money on. They have a fair idea of that of price, but they have no idea where their money's going. I've always just found that interesting. Going back, not that it's a skiting, but when I left law and went into funds management, this whole financial independence thing was fascinating me. It turned out you had to have 20 times in capital to earn, to live. If your income was, you wanted $100,000 to live on, you needed $2 million in capital to be able to achieve that, to be financially independent. I was fascinated with that at the age of 24, 25. It turns out I achieved that at 29. Then I thought, that's just not that difficult. But it came through gearing. It came through positive, not so much negative, but positive and neutral gearing through real estate. So I got there that way, and it works for me. I understand that space.
Well, speaking of real estate and speaking of where Australians' money is, I suppose super's a big one. Retail shares sort of a big one, but property's massive. And perhaps I could ask Besa, is that safe as houses at the moment? Property market, we know supply is low and demand is high as population grows. Is that a dynamic that's going to continue and our house price is going to keep rising?
Yeah, look, I think it was interesting what was said earlier about the planning, because planning is a part of the problem that we hear quite frequently from our builder and developer customers, just how long it takes to get through planning to build dwellings. And certainly if we have a look at dwelling approvals, so you need to get a dwelling approved before you build it, that's well off the peaks in the recent cycle. It's down around 50 to 70% depending on which state or territory you live in. So we know that residential construction activity is going to slow further and slow at least for the next 12 to 18, if not 24 months. At the same time, remember that net overseas migration figure that I gave you that breached 500,000? Most of those migrants come to live in Victoria and they come to live in New South Wales. So dwelling activity is slowing at a time when the population's exploding. The cash rate has been driven high 13 times by the Reserve Bank to 4.35%. The next move will probably be a cut. But as I said, there are some risks that that might be delayed later into the year. And even then, when the rate cutting cycle begins, based on market pricing and based on the Reserve Bank's very own forecasts around inflation growth and unemployment, it may not be that deep a cutting cycle. And so really that gives you a recipe for this housing shortage to continue. But it has opened up a two-tier residential housing market. And I would put Sydney, Brisbane, Perth and Adelaide in one bucket. I would put Hobart, Canberra and Darwin in another bucket. And I would actually start to put Melbourne, if I left out the population explosion, into that lower tier bucket. And the reason being is those changes to land tax late last year has had a real impact on investor sentiment around the residential housing market. And we are seeing listings rise in Melbourne. And I think that's investors offloading properties where they are struggling with those land tax payments. So we are seeing the pace of dwelling prices ease in Melbourne. I don't think the pace of dwelling prices nationally will match what we saw last year anyway, because affordability has become more stretched with the pickup in prices over last year. But I just think in Melbourne, there is the potential perhaps not to perform as strongly as some of these other markets. One thing I will point out is that Australians living in New South Wales and Victoria post-COVID, we did see more Australians leave those states to live somewhere else than Australians coming into Victoria and New South Wales. But what we're seeing now with the net interstate migration flows is that actually in Victoria, it's almost come back to zero. So no longer are you having net outflows to the rest of the country. I think part of that is because compared to some markets like New South Wales and Queensland and even South Australia, Melbourne doesn't look as great. And so that is encouraging Melburnians to stay in the state, given that the labour market is still very solid here. What I am concerned about with Victoria, if I can just stretch that a bit further, is just the pipeline of capital expenditure projects over the long term. Very solid at the moment in the pipeline. But then if I have a look at what might be it in the future, that really slows down quite significantly in Victoria. So we're just watching that quite closely in terms of the state. So I guess the broad picture is that the housing shortage will continue, but I think it won't be as acute in Victoria as in some other states and territories. I do agree that you do need to look at planning and overhauling that, but I think you also need to look at tenancy laws. I also think you need to look at how taxes interact with each other, and you've got to look at that more broadly. You've got to make any changes gradually. They've got to be grandfathered, and the reason they have to be gradual is because there's more people that own a home or have a mortgage than there are people that are about to enter the market. So it's politically fraught. Remember the birthday cake with John Hewson? If you're too young to remember that, Google it. It is a funny video. But then you also had the Bill Shorten losing the unlosable election, and then you've had the Voice referendum. So those three are combined, I think, would be sending important signals to both sides of politics that it would make politicians, I think, quite fearful of really taking on significant reform to address that housing shortage.
With that in mind, political will aside, because luckily we're not politicians, there's been a bit of a theme lately that's been popping up. Paul, I might ask you the question that is popping up. People are asking major Australian business people if they had a magic wand and they could change one major part of the legislative landscape, what would it be? What's the first thing on the chopping block, or first thing that you'd be changing? I mean, you're somebody who's got a lot of experience in property, in shares, the works. I mean, is it property? What would you do first?
Look, one thing, imagine if you had the power to do that. I mean, I think the first thing for a balanced argument is that undoubtedly they're going to be forced to move GST to 12%. I think that is coming. Good sources from Canberra, it is coming. And it's well needed, because that is that's a consumption tax. So I think GST going to 12%, and this is more or less to address the current debt, which is now, tinkering up to $1 trillion, and they're forecasting now at 1.4 between 2020 and 2032, which is a massive number. To give you some idea that when Kevin Dud Rudd was running the country, the current debt at that stage was about $54 billion. Now we're looking at 20 times that. That wasn't long ago. So that's frightening. So I think GST will have to go to 12%. I think tax on earnings in super will have to go to 15 to 20%. I think, and it's still become, and I think that will have to. It's a $3.7 trillion war chest. They'll come after that, like they have with real estate with the wealthy. There is no doubt about that. I think that if you had the power to wave that magic wand, it would certainly be for new builds. If I'm going to go and do 10 or 20 apartments and lease them out to people that need property, or even sell it to, I should have a land tax reprieve for 3 years. I think someone buying a property today for a first home buyer, the first home buyer grant is $10,000. Now, $10,000, I don't know about you guys, well, for everyone in this room, but I know pretty much everyone in this room, $10,000 gets you a TV and a couch. First home buyers scheme, you need a bar, almost akin to passing a bar exam to even qualify for the $50,000, allowing to take it out of your own super savings and above $50,000, capped at $30,000. So therefore, I think that under $1.5 million, there should be no stamp duty on first home buyers. No stamp duty. Not this $10,000 scheme. $10,000 was a lot of money when you were 5.
Now when you're buying a home.
It's built into the price. Like once you...
Developers jack up the price.
All it does is it just feeds into the price. So I actually don't think it's that helpful at all in terms of helping first home buyers getting to the market. I agree with Paul, the GST. We should look at, weighting the tax system more to consumption away from income. In Australia, there's just an over-reliance on income tax. And I think, it would be quite widely agreed, I think, among many economists that, a better move would be to widen the GST, compensate those low-income households that are hurt by the widening of the GST so that it covers everything, and then lifting the GST and moving more towards a consumption-based tax.
Right. I suppose that would be the concern, wouldn't it, that it would add to high inflation and high interest rates and hurt low-income families and all that sort of stuff. Look, I'm conscious of the fact that there's a lot of intelligent people in this room too, and I don't want to hog the microphone too much. Perhaps if anybody has a question from here, they can start raising their hand, and Steve over there with the roving microphone will bring it around. Oh, we have one already. Oh, and there's 2 roving microphones. Beg your pardon. To the gentleman here.
My question is quite simple. Thank you for the opportunity. Not all that long ago at the World Economic Forum, a Danish politician made a comment, or a statement really, that said, you'll own nothing and be happy. And I think it was by 2030. What are your thoughts on that sort of commentary?
I'll let you go first, Pam. That sounds like leverage versus no leverage.
Can you just repeat that? Was the... You mind? Sorry.
At the World Economic Forum, not long ago, it's 2016 actually, Ida Orban, a Danish politician, made a comment that all of us will be happy, will own nothing and be happy. And by 2030, this may be a reality. Given where the economy is now, the cost of living, property prices, where everyone's feeling kind of under pressure, what do you think of a statement like that, where we will own nothing and be happy? Is that possible?
Own nothing or own...
Own nothing and be happy.
Well, it sounds good in theory. Maybe not. I mean, I don't. I mean, I think that's just a I think that's a silly notion. I think that really is. I don't think that where's the aspiration and where's the incentive? And it's not about actually greed or wanting more. I mean, in my world now, I possibly have nothing that I want in material possessions. You know, cars, boats, planes. I have all that. The most for me going forward now, it's about passing on as much as I possibly can to, well, certainly to people, but to my son, and to pass that information and the resources I have on to him to go and do something better than what I've done. So I don't know how you better the world without resources. I don't know about this navel gazing theory. Does that work? I don't think so. But interesting.
Yeah, so I heard it as O. I've got children at home, so I'm sure they're sending me deaf. Clearly it was own. I'm assuming that economist might be a behavioural economist, and that's where some of the theories may come from. I guess it comes back to what Paul was talking about, which is, human nature is, I think, we want to. I think part of it is we do want to own something, whether it's a car or whether it's a house or whether it's a cricket bat for my son or, whatever it might be. So maybe that's a theory. I'm not sure if there's been, what the evidence is behind that theory, because I think, if you think about back in, the 80s and the early 90s, you had the communist system in some of the Eastern European countries. And that was where, the theory was to leave people equal and having the same things. So, for example, if you lived in Poland, you'd all get the same docket to go and get the same shoe from, the distributor of the shoes. So you'd all be wearing the same shoes and the same uniform. But I think what those systems showed when they fell down, and then we looked back on them, with the exception of China, which has its own sort of form of communist system, is that it didn't really work, that people needed to be motivated and people did want to aspire to, to have a nice home or to have a car or to go overseas. So I probably need to know more about that particular theory, but that's probably my initial thoughts.
Sounds almost like a threat. You will own nothing and be happy. So I wouldn't want to hear that. But are there any other questions at this point? Because if there's not, I've got plenty more. Down here, perhaps.
Oh, thank you. I just had a question on what you're talking about, raising the GST, etc. The other big one, I think, that was tried to get introduced at the election where Bill Shorten lost, was the changes to negative gearing. In light of the adjustments to the stage 3 tax cuts, which was obviously not particularly well received, do you think there will be any changes to negative gearing at the upcoming budget or in potential future budgets, or do you think that's too much of a hot button issue politically and they'll just leave that alone for a little while longer?
It's interesting. I have seen some news reports around, whether there might be changes to negative gearing. I personally don't think they'll tinker with negative gearing. I think it's important to have a look at how negative gearing interacts with capital gains tax in the housing market, but I'm not convinced there's a lot of political will to change any taxes, particularly given that theoretically the government could go to election in November. It'd be an early election, but theoretically they could do that. So in many ways, the budget that will be handed down next month by Jim Chalmers could be thought of as an election budget, and that's not normally one in which you see, taxes scrapped or changed in a big way. And I think, I do think that the current government would have got a fright from what happened when Bill Shorten went to an election with that big policy platform and then lost the unlosable election. I think that would be quite raw in their minds, and politicians want to be re-elected. So I don't think we will see major tax reform. I think if you go back to Ken Henry's paper on taxation, which is about 22 years old now, he recommended about 100 plus taxation changes in that paper. That's still widely considered to be the best white paper on taxation in Australia, but very little of that has been adopted
It tends to be a bit of a theme, doesn't it, with those policy white papers? Sort of sit in the drawers, don't they? Is anybody got another couple here?
Well, what is it up?
Oh, beg your pardon. Sorry, mate. There's sorry, clutched. We'll get back to you, sir.
I noticed earlier in the conversation you mentioned you started in your very young age, around 20s, through acquiring real estate that is positive gearing or neutral gearing. Given that the current market in Melbourne probably doesn't have any more positive gearing property, especially for someone that's looking to jump into the market towards the end of the market, not as a developer, how would you say for a young person getting into investment, what would be the best option?
Well, it doesn't work in the inner city. I mean, if you, depending on how far, this goes back to motivation. When I was buying real estate, and if you read through the book, it talked about buying a badge from Hong Kong for $7 and selling it for $100. Ferrari badges. You know, that's how it sort of started. And there was a demand there until I got a letter from Ferrari. and that all come to an end. But when I used to buy real estate, it was never, it wasn't 101 Collins Street. No, it was regional real estate. So I was buying homes for $50,000 or $60,000 when I started, and selling them for 90 3 months later. And I may have the lawns mowed and paint just the front of the house, not even the sides, not even the interior. Have it cleaned out, but spend about $2,000 and I would sell it. The big key thing for real estate, like for me, and then further to that, I did a lot of work, and I spent a lot of money on seminars when I was young, learning by some of the best in the world. It's in the book. I did work with Robert Kiyosaki. I used to sit on those forums when there was 10 people in the room after he wrote his book. And I learned a lot about gearing and positive cash flow. So, for example, finance was a big thing for me back then. I'd buy a property for $90,000, put $9,000 down, borrow the balance, tart the property up, on-sell the property for $140,000. I'd pay 10%. I'd get a new buyer to come in at 20, and I might have had an obligation to the bank for $500 a month, and the new buyer was paying me $1,400, and I wouldn't let go of the mortgage until they paid me out. So one of my mentors said, "Don't work for money, print it." Now it sounds coarse, but that was I was 20, it's 36 years ago. So you can do, and people say, "Oh, it can't be done, it can't be done." You need to go 2 to 3 hours out of the city. There are properties around now. You can buy a property now for $200,000, but you'll need to drive 2 hours. It's not the inner city. It's an interesting fact that I find fascinating, and some people might say, well, 78.6% of the Western world live 9 miles from where they were born. People sit there and say, well, so what? I look at that and I think, how insane is that? But that's tend to how far they'll go with their investments. They look on their doorstep. It has to be where they see it. Well, you need to go far and beyond. Most of the biggest deals I ever done were very low-end, high-volume projects, investments in the United States. They were $50,000, $100,000 deals. They weren't buying. You're not going to make a lot of money buying a $2 million townhome in Brighton. You're going to lose money. You might make money over 5 and 10 year time frame, but you're not going to make a great deal of money.
It's quite an answer to the question. This gentleman, I'm sorry, I just missed out a moment ago. We'll come to you in a moment, madam.
In the current environment, we've got 2 governments that are close together in the centre and doing a lot of popular politics. And one of the topics is climate change and renewable energies and things like that. How do you see those issues affecting economic growth and politics going forward and affecting investment opportunities for Australia and the world in that matter?
The entire world is moving to net transition to zero by 2030. even where governments aren't participating in that, the private sector is participating. That's likely to just continue, I think. At the moment, I think in terms of our business customers, they still need more clarity around that. Those companies that are listed have more clarity because they've got to publish an annual report, their financials are published, whereas I think if it's a family-owned business, it's a little bit more having grey around it. But I think, the entire world is moving on that path to net zero. And increasingly when I'm speaking to our customers, they do want to know about what is going to happen to their business, what's going to happen with interest rates. Will there be a green component? Our agricultural customers that I saw recently, for example, in Victoria, in Horsham, there were quite a few of them that were concerned about green tariffs from Europe on Australian producers. So increasingly that will become part of the conversation, and increasingly that they are factors that businesses and corporates must incorporate, because this is something that the world is embarking on. And if you're not proactive and you're not thinking about it, you will be left behind. Now, the US has an Inflation Reduction Act. That's got nothing to do with inflation. That has to do with the green transition. There are significant subsidies. It does make it harder for countries like Australia that are really only trying to catch up now in the last couple of years. But, the sun and the wind, the sun shines in the right places and the wind blows in the right places in Australia. So we do have a natural advantage, and it's just about whether we can capitalise on that natural advantage.
Paul, thoughts?
I think the targets are a bit of a reach. I don't think the time frames, I think the intentions are fantastic. I mean, and the evidence is, I don't say it's overwhelming, but it's pretty clear that obviously the climate's changing. But at the same time, you've also got to adopt the commerciality into that as well and make that work. So, pushing the pendulum to left or focusing on the environment. I mean, we spoke earlier about, electric cars are obviously the big move, but that comes at a massive cost. And I don't think the government's, the intention is good, but I don't know whether I think it's more of a vote grab than what it is really thinking well through a well-engineered plan. That's what I think. I don't think, that's like saying to someone today, well, I want to be a runner and I want to be able to run inside 100 metres inside 10 seconds. Well, that takes an immense amount of training and dedication to be able to do that. I just think that the time frame's just unrealistic. That's what I'm saying. I think that it probably needs to double or triple, and you'll probably meet that target.
And I think some people are coming to accept that you can't reach that 1.5 degrees by 2030, but there's still some that I guess are trying to stick to that. So I think Paul's right. That'll probably end up getting pushed out. I guess it's that a lot of carbon modelers don't actually know what happens when the planet really heats up. Like, does it actually just start getting a lot hotter, not in a gradual fashion, but perhaps exponentially? And that, that's the risk.
Very difficult to kind of factor in the investment side of things, as you said there, Paul. Probably got time for, what do you think? Last question.
Just to shift gears a little bit, Paul, I know that you're very well qualified to talk on this subject, an alternative investment, classic cars. How's that looking at the moment? And is there one that we should be seriously looking at?
You asked me 12 months ago. I mean, look, the classic car market is, it's beyond art now. It is an alternative asset class. That's not an advice or a script to go out there and go and buy classic cars at all. It's not. And you do have to know what you're doing. But I think, the people who are in a position to be able to buy classic cars, and particularly at the high end, the market now has, at the ultimate, with the top, the pinnacle of the market, that market has stabilised and done extremely well and will continue to do. I'm talking about low volume produced cars. The lower market, where there's the barrier to entry is between that 200 to 500, has come off. The luxury market has come off even more so. So, yeah, I mean, it's getting to the stage, particularly in the areas of Porsche and Mercedes-Benz, but, you know, I think it needs to be kept in perspective. I mean, it's amazing what Australian classic cars have done in time. I mean, some of the Australian classic cars now, the old GT and Monaros that which used to be lined up outside our place every Friday and Saturday night, and they were $4,000 and $5,000. Now they're $1 million. Fascinating. Not my thing, but you know, here I've got some friends in the room that have got some very serious collections. You know, I'm talking best in the world. Also, but yeah, we also spent some time in Europe before Christmas, and looking at that market. Pretty humbling. You know, there's some collections over there in Europe that have got, you know, some of these cars are trading at $4 and $5 million each. You know, and they're trading, and they'll never be seen on the market. They'll never be seen on, well, they certainly won't be seen on car sales. Or the most frustrating platform has certainly got to be, was it Marketplace? Oh, my goodness, you need to have patience for that. But I think that market is extreme. But, you know, over time, it was certainly the limited number of production, no rust, no accidents, good history, and limited number of production, I think is a critical thing. You know, that those things on those cars are becoming where some of them have quadrupled in 15 years.
And I just have a quick follow-up, actually. If I can press you, you've got a large collection. Is your favourite one the most expensive one, or is this where sentimentality and investing gets the better of you?
No, look, as you get a bit older and wiser, I mean, you know, if I was 21 years of age, it'd be all about speed. You know, there are some cars that'll do inside of 3 seconds, do it 100 kilometres an hour. But now it's all. My favourite car is probably a 71 Cabriolet Mercedes-Benz that I enjoy driving around at 90 kilometres an hour. You know, and takes 11 seconds to get to 100 kilometres. And so, yeah, that's the most enjoyable car I have now. But I mean, they're all cars. I mean, it's interesting when I was dating, you know, many years ago. A lot of you'd meet 1 in 3 that say, "Look, car's a car." I mean, that would just violate every bone in my body when someone said that. I mean, you know, straight away that would end where she'd be ordering the main, I'd be ordering coffee, and I'd be out. You know, you gotta be kidding. She's not for me. So, you know, it's art. You know, every car's different to me, and it's mainly Porsches and Benzes, the older ones. I don't get caught up in the super hyper cars anymore. It's just a day by day. It's like having the latest stereo equipment, then tomorrow something else comes out that's better. They're not going to get, supercars aren't going to get to 1 second. You know, it'll probably be more like flight. Yeah. So
I did want to end on some talk about classic cars. Look, I'm aware that there are a few people who didn't get their questions got to, and I apologise for that. But Paul's going to be signing books in a moment, so there's going to be time to have a little bit of a chat. Look, if I could, thank you all very much for coming out this evening, and a special thank you to Besa and Paul, not only for writing the book, but for speaking with us a little bit tonight. Perhaps we could put our hands together.
Thank you very much.